Afternoon, everyone. We have full room. Super excited for today's workshop. I hope you had a great weekend going through the template that we shared. There will be some few updates for those who ask for additional elements to the template. And today is very exciting because we are being joined by, of course, Joy, the Dream Team, Joy, Youssef, and Ayman. And we have also today Ayub, who will be your facilitator, and he will take you through the workshop itself. He's been in the startup ecosystem for the past 5 years, helping startup raise capital and crushing numbers. So I'll hand off the mic to Joy. But before I do so, those who requested to have updated logo and updated name, like I'm thinking of Atlantis Hero. If you don't mind sharing with us the new name and the new logo with us at Create Apps at bncpublishing.net. And further down the road, we'll be asking the high-res logo of those who have shared the logo, but it's not high-res. So that's it for me today. Of course, we're available on chat and by email if you have any question. And now I'm going to hand off the mic to Joy for the rest of the session. Joy, the mic is yours.
Thank you, Sarah. Hello, everyone. Okay, so everyone, you can hear me, right? Okay, let me just admit the others. Welcome to the workshop to learn how to develop your startup's financial plan. So welcome, everyone. Before we start, we'll do a quick icebreaker. So this will be the financial emoji check-in. So in the chat, everyone, please send the emoji that represents how you feel about your financials for your businesses or for your app businesses. Please send in the group chat your feelings or via the emoji to represent how you feel about your financials. Okay. So Nabila, say, okay. Yeah, Yellow Baggage is that frustrated. So Tana and Rima and Nabila, you're all the same. Sharif, money, money, money. Ruhi, okay, so everyone's almost the same. Manal, Rahla, okay, Priyangshu. Sultan, is he blind? Okay, Atlantis Heroes. Okay. All right. So now that we have an idea on each other's thoughts and feelings about our financials, that is like let's see if that will change by the end of this session. Okay. So thank you. That's enough for the icebreaker because we don't have much time. We'll be um, talking about a lot of things financial. Just some house rules before we begin. Please, you're already following it, so just please make sure to keep your mics on mute if you are not, if you don't have anything to say, or if you are, if there's no question addressed to you. And if for any questions, please raise your hand. You can also send it via chat, and we will get to your question. It will be answered live by our financial SME during the session. Okay. And also, we updated the financial template per the request because of the feedback from Sultan. So thank you, Sultan. You will see now the updated financial template download link in the chat. It will be shared by Youssef. Okay, so you can open this. We added just some parameters that will be helpful to your financial planning. Okay. So next would be the content. So these are the things that we'll be discussing during this workshop. We'll start with a quick intro, and then we'll talk about the key financial documents, terminologies, and common pitfalls. Then pricing strategies and the revenue models, financial projections and unit economics, runway burn rate management, financial planning readiness and financial model walkthrough, And then we will do the practical exercise, which is the hands-on exercise for all few participants, wherein we will be filling the financial planning template in real time. And then we will open the session for questions so that we can give you tailored feedback. Okay. So, how important is the financial readiness for the semifinalists of the Create Apps Championship? So, just to give you an idea, this I personally experienced last year. There are a lot of opportunities that you will be you will be receiving during the actual finals on the ceremony day. So last year, the winners and non-winners gained valuable opportunities. They were actually asked by the audience, they were there were audience members, investors in the audience, even the jury members who walked up to both the winners and the non-winners of the competition just to ask them three questions mostly. How much are you looking to raise? How will you use the funds? And what is your pricing model? Now, for some of the but some of the participants were not ready with their answers to these questions. So obviously that was already a missed opportunity because what the investors or the audience told them was, okay, please get back to me once you have the answers. So that is already a missed opportunity, and that is what we're trying to avoid. And this is why we're helping you prepare for your financials as we journey on to the finals. So let's all remember, financial literacy equals to investor confidence, and no planning is equals to lost chances. And this is why our approach today is to learn the simple, practical financial essentials, focus on key terms to drive the conversation forward. And as I've said, the hands on segment of this workshop is where we will be filling out the financial plan readiness template to structure your financial strategy and strengthen your your final pitch. Okay, so this will be our flow. So we will so for the finals or the ceremony day, the flow would be investor interest. They will ask us key questions. You are either prepared or unprepared, and that will be the outcome. So to make sure that you have a positive outcome, we will make sure that you are prepared to answer the key questions from the investors or the audience members that are showing interest. Okay. So without further ado, I'd like to introduce our speaker for today, our financial SME, Mr. Mohammed Ayub Rafiq. He runs a business and intermediary connecting venture capital firms with startups and advising them on financial growth models and projections. So he is actually a chartered accountant who has worked with a lot of startups in the region, and he has background working with KPMG and BDO Binder International. So I will now hand over the mic to you, Ayub.
Thank you so much, Joy. It's been absolute pleasure connecting with the amazing startups looking to raise funds and moving to the next stage. Hello, everyone. So I will give a very short intro about me. I'm helping startups in fine-tuning their numbers, crunching the market, and identifying the best pricing strategy, identifying the target market size, and doing the best identifying the best financial metrics, customer acquisition cost, customer lifetime value, P&L. So all of this stuff we will be discussing today in our meeting. So I'm super excited to connect with all of you. I will begin with uh, an icebreaker where I will introduce you the basic financial documents. So the purpose of the meeting, purpose of the training is to identify what are the key financial documents, why it is important for the startups, and how to run through those financial documents. So we created a template which is super easy to use, a very friendly, even if you're not well aware about the financial terminologies, financial metrics, you can still use that and you can keep yourself aware of your future planning in terms of financing. So let me share my screen with you here. So we will make the session more interactive, very quick, but I would like you to participate in between. So we were talking about the key financial documents. How many of you heard of P&L, balance sheet, cash flow statement? Anybody? But just type in the text or raise your hand or just contribute in that when we're moving forward. So we have two major financial documents. One of them is the P&L. P&L is the profit and loss account. It tells us like what is the profit in a specific period of time, like in 1 year, in 6 months, or over a span of 2 years, 5 years. So P&L is basically a profit and loss statement, which gives us a picture about the financial performance of a company or a startup in a given period of time. So this is very important for investors, for all other stakeholders who invested in the business. Then comes a balance sheet. What is balance sheet? Balance sheet tells you the financial position, like how many assets do company have, what is the liability, what is the loan that company on. So it reflects the financial position of a company at a given period of time or a specific period of time, 1 year, 2 year, 3 year, 1 month, 2 months, 6 months. So depending upon the needs of the business, you can adjust accordingly. Another important document is the cash flow statement. Cash flow statement reflects the liquidity position of a company or a startup. So in the startup arena, we use the term runway, we use the term cash burn. So the burn rate is very important too. What is the burn rate? Burn rate meaning how much cash are you spending in a month or within a span of 6 months or within a year. Same goes for the runway. Runway reflects the amount of cash you have for the next 6 months or for one year. That is important for investors. I'm coming across so many venture capital firms, and when they perform due diligence on startups at the seed level or at the Series A level, they want to identify what is the amount of cash that a business has at any particular moment. Do they have enough cash to cover the next 6 months or 1 year? So if they have less cash, that is not a very good sign for investors. And they usually avoid to invest in those businesses at the seed or Series A level. But for the pre-seed, like you are at the pre-seed stage at the moment, runway is not that much important because at the idea stage, prototype stage, MVP stage, investors are most of the time looking into your planning and your preparation. Suppose you have been given $100,000 or 500K. How would you maintain your runway? How will you control your burn rate? How will you be burning cash month over month is important. Like mental preparedness is very important for that. And the pitfalls, one of the common mistake that early stage startups are making, they come to me and they say they don't need any kind of financials because at their at idea stage, prototype stage, MVP stage, and the investor would not be asking for this, or the stakeholder would not be interested in this. That's absolutely wrong. Every investor out there or the venture capital firm, they will ask you this question: how are you prepared if I invest in you? Are you investable? So every time ask yourself this question: are you investable? Meaning, do you have a believable plan? And that plan is not just your idea, your MVP, but how would you manage your cash? How would you manage your investments? in the short run or in the long run? That's the question investor is looking from you, the answer from looking from you. So this whole exercise will be for that purpose. So I will quickly go through the profit and loss forecasting, the terms we will be using within the presentation. The very first thing is the revenue. Revenue, what is revenue? Revenue is the amount of sales you are making. So the number of customers into average price gives you the revenue, or you are charging one-time fee. I will take an example. Kareem, everybody uses Kareem. So can you tell me how the Kareem is earning his revenue? Simply, Kareem has two kind of models. One model is Kareem encourage you to be a pro member. Like you will be giving them monthly subscription fee, but that's not limiting you to use their application. You can still be their customer on a free model, and they will charge you per transaction. So Kareem is using a revenue model where a business model where they are charging per customer, and they are charging pro members a fee that is a monthly fee. So this is the kind of thing which will give you an understanding what is the revenue. Do Kareem charge any type of one-time fee? No, they do not charge, but you can charge one-time fee as well, depending upon your particular product or business model. Cost of goods sold. It's a particular term which is very orthodox in nature, but in case of applications, the cost of sales would be inappropriate, but this is an established terminology. So cost of goods sold is usually used as a standard terminology in the financial statement. So it can be a cost of sales as well. In case of an application, a software, what kind of cost would be directly associated with the production of that particular service? You will have a server cost, you will have a development cost, you will be having a support personnel, you will be using third-party services, anything that contributes within the product or the product development is associated directly with the cost of sale. Everything else is not a cost of sales. We will see in the next. So gross profit is equal to revenue minus cost of sales. So meaning you still have some expenses left. What would be that expenses? Can anybody type in the chat? So now we will understand the gross margin. What is the gross margin? Gross margin meaning before deduction of any other expenses, you determine your ratio, which tells you your profitability. So I have a question for you. For startups, does investor look for the gross margin or not? And how important it is? How do we calculate the gross margin? Is the gross profit divided by the revenue into 100%. So it could be important from the perspective of an investor. He wants to know what is the return on investment that he is investing in a product. Then we comes to the EBITDA, earning before interest, tax, depreciation, amortization. Don't worry about the terminology. EBITDA, just remember EBITDA. EBITDA is the commonly used term in the profit and loss account, meaning it tells you a more bigger picture, a more clear picture of a profitability than gross profit. Why? Because you are detecting not only the revenue, not only the cost of goods sold, but also the operating expenses. So what is the operating expenses? Can anybody type in what is the operating expenses? Operating expenses is any expense that is associated with the operations, your marketing, your administration, any kind of overhead. What do we call the overhead? anything that is not associated with the product itself, or like you hired a developer building a product or preparing a beta version of that, that is directly associated with the cost of the product. But you hired a team for the marketing. Marketing is not directly associated with the cost of sales, but that is still an expense. So we minus the developer cost, we minus the marketing cost, and we will find the EBITDA. EBITDA would tell a more clear picture, like it will give an investor hope for the future if EBITDA is positive and it can cover your interest and taxes. ARR, a commonly used term with the application, with the SaaS, the software as a service model, is the recurring revenue. What is the recurring revenue? Meaning you are earning month over month uh, with a static or with a growing customer base, not leaving your platform. Kareem, Kareem is having, when they launched, they had 100 customers in the first year, or yeah, assuming the first year, 100 customers. Second year, they acquired 1,000 customers. So the combined year one, 100, year two, 1,000, 1,100. So they have grown the customer base year over year, assuming the customers are not leaving the platform, they are staying on the platform, and they are earning a recurring revenue, same customers using the platform month over month, year over year, and not leaving the platform creates recurring revenue. As opposed to what? You're charging somebody one-time fee for using the platform. They might not be using that platform again. They would leave the platform. They will be just using once. What is the good example of that? Mm, Crunchbase. You are using Crunchbase. You need some data. They give you an option to buy data in $100, and they will give you 1,000 investors' data you got from there, and that's it. The transaction closed. But if you want a permanent customer, if you want to be using that platform month over month or for the whole year, then you need to have a subscription for the whole year. So this is the difference between one-time fee compared to the recurring revenue. Recurring revenue incurring every month. That's why we are multiplying monthly recurring revenue with 12. So the monthly recurring revenue is equal to the sum of the monthly fees of all the paying customers. So you have 100 customers in a month. All of the revenue associated with those customers is your MRR. EBIT is important term, gross profit minus operating expenses, earning before interest and tax. We already discussed that. It's the kind of repetition. Net income is equal to earning before interest and tax minus all interest minus taxes. In UAE, we have a 9% tax on the corporates. So minusing the taxes, you will get the net income. That income is distributable income. You can either reinvest in the business or you can give back to the investors. So we will take a quick recap, the whole P&L. Net profit is equal to revenue minus cost of goods sold, minus operating expenses, minus interest, minus taxes, and you will get the net profit. Anything you have in mind related to this, just comment in the chat and we will be taking that. So cash flow projections. Net cash flow. What is the cash flow projections? Why it is important? Cash flow tells you the liquidity of your startup. So cash inflow versus cash outflow. how much cash are you generating and how much cash you are spending. So meaning how much cash you are burning and how much cash you are bringing through sales, through investment. So inflow versus outflow is important to understand. If you minus cash inflow from outflow, you will get the net cash flow. In this case, we took example. Cash inflow is 280. We minus all the cash outflows and we will get the net cash outflow. It's the simplest example. Now, we will go to the pricing strategy. I took an example of the format, which is an existing startup in here, and we will understand how the revenue model and assumptions are important for us, why market size is important. Please shoot the message in the chat and we will incorporate your thoughts as well, or you can just contribute quickly by turning on your volume and you can share your thoughts on that. So what is the market size? Why the market size is important? Every startup out there says they have a huge market. What is the market? How do we determine the market? So we divide the market for understanding purpose into three different segments. The total addressable market, sizable addressable market, and sizable obtainable market. Format is an example, or I will take just example of North America in here. The SMBs in North America, they're worth $5 billion, meaning uh, related to the product, it's a good market size, and for any kind of business or any kind of startup that wants to target SMBs, or we call that SMEs as well. What is the SAM, sizable addressable market? That depends on your product, your and your use case. If you are addressing a problem associated with the accounting application, which resonates with all the SMEs, because without accounting and bookkeeping compliance, you cannot move further. So, meaning the market is huge, but how many SMBs are interested in your product or would be interested in your product? So, SMBs are generally using QuickBooks, Zoho, Xero. These are the accounting softwares. So, meaning if you say you have a better accounting software than those existing accounting softwares, all of the existing accounting application users would be your customer. So you can target them and you can estimate like out of 5 billion, probably 50 million would be potentially my user. So in here we are assuming 4.2% the SAM. But again, that this is a very abstract way of looking into the whole thing. So we will go further down and we will look into a particular thing and understand how the SAM, SOM, and TAM works. Now we will focus on the revenue modeling and assumptions that in terms of the pricing strategy. Assuming you have identified your target market, you know who is your client and what is the buyer's persona, who will be an ideal customer for you, then you need to identify how much are they able to pay me for that particular accounting application. What you can do for that is you can do different kind of testing. You can create a landing page. You can create some surveys. You can test out, and then you can analyze the market. You can check the competitors and identify what are the existing accounting softwares charging to those clients. So there are different ways, and you can tier the pricing into 2 or 3 different segments. Like you can offer basic version, which is usually happening in $30. I'm assuming the QuickBook is charging you $22, but if you have better options, like you are providing an AI automation, AI predictive analysis, so you believe that you're charging a bit high, then QuickBooks, QuickBook is charging 22, you're charging 30, so probably you gotta check it out and do the survey, reach out to those people and test out with them if they agree on that, if they're happy with this. And then you can go to the enterprise where there are number of users increasing, like this $30 is per seat or per user. But you can increase the seats, and you can offer them some discounts on that. And enterprise version is $100 per 5 seats compared to $30 per basic. So there are different ways you can identify your best pricing based on customer feedback. Per user pricing is an option, premium, free basic version plus premium features. So these are things we're gonna discuss further. Testing methods, how to test the pricing. There's a A/B testing for financial optimization. A/B testing generally applies at the seed level where you have a product and you can allow customers to come and use your product. But if you just have a prototype and you believe you can do testing, you can offer them some kind of feature and you can test them out, it will be a good option. You can still do the A/B testing. So what is the A/B testing? A/B testing is like you create a group A, group B, and you charge 29 to group A, 39 to group B, and with different packages, and see how many of them are buying which package, A versus B. So you can analyze the user behavior. And the pricing, the people forget about the pricing is the user behavior analysis that you have to do all the time and test out how it turns out from the user perspective. So based on that, you can segregate the feature building, you can differentiate the packages. For example, the $29 is the most used version. And if you charge 39, you can have few customers, but your revenue will still be in a decline. But if you give 29, you might get more customers at less price and your revenue will increase. Or there is another way you can segregate this, or you can take an average. You can go for 32 or 33 in between. So all these factors, depending upon your costing as well, the cost structure, the server, the hosting. But in case of applications, that's not a big of a deal. The server and the hosting cost or the developer's cost is not that big. So price sensitivity testing, we discussed that the survey on price points, purchase intent at different prices, you need to identify. You can use different available tools. There are tools that you can use to analyze the behavior. For example, many times I go to an application, I try to purchase that, and then I stop. And the next day I do the same because I need that application, but again I stop. And third day I go and I check again and I buy. So sometimes you would see people are coming to the application, they want to buy, but they stop. So if you have some kind of tool which can analyze the user behavior, like user is clicking on the particular price range, but they're not buying it, this is a good sign. Probably you need to tweak around, just look at the statistics, check out. So you can deploy some tools to analyze the user behavior for that, for the price sensitivity testing. So then we gonna go on the break-even analysis, which is the unit economics. So investors in general, they are looking for the unit economics. Anybody can tell me what is the unit economics? What does it mean? It's the commonly used term these days. You know, 4 years, 5 years back, investors were investing in the SaaS platforms without taking into account the unit economics. They will look at the idea, scalability of the idea, and then they would invest in a product. But over the span of in the last 3 years since COVID, investors are pretty much interested to know the unit economics. They don't want to deploy the money. just on the basis of the abstract idea. They want to know the profitability per unit. So the unit economics is anything associated with the product cost, profitability, net margin. Even if you are doing losses in the first year, second year, but you should not be going in a loss on, you should not be incurring losses on a particular product sales. For example, we took the example of Kareem. Kareem charges 95 dirham for a pro customer. So they have to estimate their cost of sales. And I'm assuming their cost of sales would be 50 dirham. And out of that, 95 minus 50, they're earning profits. So this is the sign which investor is looking at when they look into the product. So some products, for example, I talk about the health tech, the products associated with a lot of testing, lab testing, scientific testing, approvals, and a lot of workforce involved. There could be an example of the vaccine and or anything that's like the blood testing or some improvement in the using of AI to analyze the human brain or there's some startups working on a chip that could optimize the human brain power or optimize the human skills or human cognitive skills. Such kind of startups need a lot of funding for the initial stage, like at the pre-seed stage. It's an exclusion to this thing because their capitalization or their investment in the initial period would go 50 million, 1 billion, like that, and for the years over years. And you just name it. And at the end of the day, it might be a loss. Nobody knows about that. But these are the high risk startups. So they would not be measured against the unit economics because the unit economics or the payback period would be in losses for the next maybe 2, 3, 4 years. But a simple SaaS platform or any AI platform optimizing the workflows of day to day business operations can easily generate profits on unit economics. So that is why it is important to focus on unit economics. And this is the primary interest of any investor out there. In this, you can see like the pricing is $50 per user per month, and the variable cost is $7 per user per month. So the break even, sorry. Let me go back. So the break even is in this case 1,357 users. What does this mean? Break even meaning how many customers you need to sell your product to reach a level where you are incurring no loss, no profit. How many people you should sell your product to reach to a level where you incur no profit, no loss. So this is the important uh, estimate for any investor out there to understand the uh, unit economics of your break-even point, contribution margin. So it's very, very important for you. Going to mobile application, we took previously the example of Kareem, but somebody, some startup asked me this question as well, like how can we measure the capital efficiency ratio, CAC, payback period, net revenue retention, gross merchandise value. So I guess some of you guys are using the e-commerce platform, and gross merchandise value, which is the last one in the slide, is very much associated with you. This particular KPI is used for the SaaS platforms, and it it is used by investor to value the startup worth at any period of time. We will look into detail of this on the Excel sheet. Any question on just ping on the chat box.
Hi, Ayub. I have a question.
Yeah.
Yes. Are the participants still there? Because there are questions. We're looking for answers in the chat box. So feel free to answer. Okay, thank you, Egaman. I think Egaman is the only one who's still here. If you have answers to Ayub's question, so we can make it engaging and to make sure that you are all there and still awake, feel free to unmute and answer the questions live. Okay, thank
I
you.
guess,
Yeah.
Joy, we can take 5 minutes question and answer in
Yeah.
between. So we will engage everybody and then I will move on to the next.
Okay, perfect. Yasmin has a question regarding CER. Yasmin? Yasmin's question is, what's the best score of for capital efficiency rate? Because she said it's a very subjective KPI. So Yasmin, are you there? Yes, but she does okay, so I read it out loud, the question. Again,
Yeah.
for capital efficiency rate, what's the best score for that?
What's the
Okay,
best
Yasmin.
use case for that? So the thing is, I kept it very basic for the understanding purposes because mostly the startups are at the pre-seed MVP prototype stage and they're raising funds. And this is just for the understanding purpose. Like once you get funded, you will be estimated based on, you can use this to understand your efficiency or your performance. What is the efficiency ratio? Is the revenue versus the capital you raised. So revenue generated, supposedly you launch an application and you raise 500, you generated 500K revenue as compared to the capital you raise, which is 250K. So what will be your capital efficiency ratio? 500K divided by 250K is equal to 2, meaning every $1 you raised, you generated $2 in return of that. This is the simplest way to understand your performance in terms of capital investment. This ratio is not applicable to the pre-seed and seed stage startups. Why? Because most of the time, startups are not making even gross profits in the first year. So that does not mean they're not performing well against. So they start generating revenue in at the end of the first year, and in the first year they're not even making any profits. You look at the P&L of the mostly pre-seed startups, they're not making any profits. The only thing which we look at is the positive thing, like the unit economics. Whatever they are selling is at a positive rate. Very few startup, bootstrap startups, being invested by the founders, generating that amount of the profitability. So return on investment is the key for you. But this is very subjective to the type of product you have and how you want to apply it to this thing.
Okay, thank you, Ayub. Ayub, what we're seeing right now is not a full screen. So if you can please make the presentation full screen. And Yasmin, was your question answered? Okay.
I can ask the attendees some questions from my own understanding for the product, and probably it would be a good idea to explain your product as well in between. And I can randomly ask someone to introduce their product, and we can incorporate their product into the case study that we are, or the Excel sheet, and it will
Mhm.
be a good thing to go. So I'm gonna engage the people, and I can start with the first one I see. we can start with Nabil. Hello, Nabil. Can you hear?
Hello, Ayub. How are you?
I'm good. Nice meeting you. So,
Okay.
Nabil, can you give a very short one-liner intro about your product?
Dimidic, it's an application that will help users to uh, determine which medication must be taken with other. Uh, it's just like a protector from from the oh, I lost the words. So it's just like a protector from the bad habit of using medicines without prescription. Based
Does
on,
your startup name Format, if
yeah,
I'm
it's
correct?
Dimidic.
Right.
Dimidic.
Okay. So, can you tell who is your ideal buyer for the product?
Everyone who's taken medicines without prescription and even with prescription too. Let me explain. In
Sure.
UAA,
You just have 1 minute because we gonna go back to the explanation as well. Just keep it short.
okay, in UAA, everyone takes medicines without prescription and even with prescription too. My role or the role of Dimidic, it's to prevent interactions between those medicines because when you're taking a medicine, it's maybe dangerous to take it with another one. So I am here to prevent you don't take this medicine as you are taking another one.
Okay. So who is the ideal buyer? Who would buy your product? Just in one liner. How many type of stakeholders would be interested in that product?
For me, it will be at least 33K users in UAA, especially users that are taken for healthcare applications and they are taking medicines.
Okay. So who is the buyer? The question was who is the buyer? Is it the physician? Is it the patients? Is it the nurses? Who would buy that?
It will be directly in stores.
Uh,
But so it will be everyone, everyone.
so you say stores, you say physicians, you say the um, everyone, meaning everyone, general public.
Yeah, general public, everyone taking medicines.
So it's a B2C, if
Yeah,
I'm
it's a
correct.
B2C application.
Right. So what do you think? How did you come up with 33K users for that?
Sorry.
How did you come up with 33K users? What was your logic behind?
Okay, so my logic it's based first of all of the ratio of using OTCs or medicines without prescription in the market of UAA, and in the same time the number of the persons or the series of application for health applications in the market. So, but based on those ratios, based on how many user installs health applications in the market, and based on how many users are taking medicines without prescription, I calculated my sum and sum to get at an average of 33K user everywhere every year.
So I'm gonna share with you the target market size slide.
Okay, I will.
Just to calculate your target market size, it will be a good thing. Good exercise. How to identify target market size and how to identify pricing. Let me reshare my screen.
Mm-hmm.
Can you see the Excel sheet or is it the same thing?
No, it's the
Still,
same. It's
yeah,
PPT?
only
still
the
the
PowerPoint.
deck.
Okay, let me reshare that.
I think you have to stop sharing and then reshare, Ayub.
Yeah, that's what I'm trying to find out.
Okay.
Just
Thank you, Nabil. Ayub
okay.
chose a
So
very, yeah. Okay.
Okay.
is it
Mhm.
visible now?
Yes, it
Yes.
is.
Perfect. So Nabil, we were talking about the target market size for you, and you said like 33K in the first month, in the first year.
In the
So
first year.
this
Yes.
33K, when we try to dig down, what type of customers do you have into this? And you said like it's a B2C and it
Yes.
involves everyone into this.
Mm-hmm.
So can we make it like identify how do you resonate with everybody? Because not everybody is sick, not everybody is looking for some prescription for medicine, not everyone is taking medicine. So there should be some criteria in your mind. What is that?
Okay.
Just explain quickly and we will go over.
Okay. In my mind, we have at least 6 million users of self-medication in UAE, and which means the half of of the UAE population are using medicines without prescription. They are buying medicines directly in the over the counter without medical guidance. In the same
Okay.
time, the OTC sales in the market, this market of OTC, which is selling medicines without prescription, is every year growing with a yearly rate of 5%, an average of 5%.
Can you quickly throw some numbers? Where did you get data for OTC? Can you just
Okay,
quickly go through some
five
numbers?
5.6 million users of OTCs.
Okay.
This is
5.6 million. Okay.
mhm, which means the half of the population.
Okay. So who is falling in, like, if we go, like, who will be the most interested buyer? B2C is a good thing. Everybody who is looking for the prescription is a good one. But if we
Mhm.
strictly identify who will be exactly looking for that, who will be that? Physician, nurses, healthcare entities, stores, or anybody else. Just identify from the label or tell their kind of identity, like buyer's persona. How would they look like?
So, when we're talking about the persona, it's everyone because I'm not really going to sell the application only for physicians. Physicians are my partners. I have another product for my partners. The real and final users are travelers and patients only at this stage.
So how will you label them, or how do you label your buyers?
Medicine takers, especially everyone who takes medicines, it's a target for me.
Okay. Okay. So right. So anybody who's taken medicine is your buyer,
Yes.
technically. Perfect. So you taking the percentage from this, the market size, and you say like these are the guys which will be using. Did you look at the CAGR, compound annual growth rate of the market, of the industry, of the healthcare? How many people are generally looking for such kind of treatment?
Actually,
CAGR is the compound annual growth rate. For example, Uber has the compound annual growth rate you can find at the stock markets, or you can look at the usage of medication at Pfizer. or any other, you can identify their compound annual growth rate. And that growth rate can be related to you as well. Because if they are growing, you might grow as well. So did you look at some of the CAGR of the industry you're operating in?
When you're talking about CGRs, partners.
Compound annual growth rate. We say, let's say there is an industry, Kareem.
Mm-hmm,
So Kareem is growing 10x supposedly per year or per 5 years.
mm-hmm,
We can look at the industrial growth rate of the industry at the global scale or at the regional scale. Is Kareem is growing 10x within UAE as within UAE only, or they are growing 10x all across the globe? Or we can compare them with the Uber. What is the growth rate of Uber? Is Uber growing in the same fashion like the cream is growing? So if the Uber's growth is not at par with the cream's growth, meaning cream is performing better. So we identify the industrial trends in the industry. So that's why it is important to understand the industry you are operating in. How is that performing? Are
okay,
more people using the prescription based services? Is the medicines being consumed more than the last year? Would be a good indicator to assess the market,
perfect.
where the market is going.
Okay.
So you identify some market statistics and that
Mm-hmm.
help you to shape your target market size. That's why it is important.
Okay, perfect. So actually, depending of statistics that published on the internet and market and the marketing side, we have a growing rate of 5% every year of this market, which is the market of OTCs, taking medicines without prescription. And the same time, we have a growing market, a new growing market, which is selling medicines over internet or online sales of medicines. So here we have a 23% average of evolution of this market starting 2025. So we can take the 5% as an average yearly average for this market.
Perfect. So 5% we already took here. So the growth rate for the industry is 5%.
Hmm.
So this was the total addressable market. That the total market size is this 5.6. So now we come towards the chronic patients. We identified the format, but I will tailor it to your example. So
Hmm.
what do you think, like, what will be the addressable market? What will be the sizable addressable market? If you lower, if you shrink the size, how many people you realistically you are able to approach?
In the medicines takers,
Yeah.
um, I have a sum of 1 million and a sum of 33K.
How did you come for 1.5 million? What was the reason? What was the logic for that?
Uh, the reason it's the 20% of the population is actually seeking for health applications, and
20% of the population.
20%
How did you get that number? 20%.
in application. There is some website giving statistics about search in the Apple Store and the Play Store.
Okay. So Apple Store and Play Store. Pretty
Yeah,
good.
people
So you
seeking
took that.
for health apps.
Okay. So if I say, you said 5.6 million, and out of 5.6 million, you're gonna take 1.5 million. So what will be the, if you go into percentage, how would you calculate in percentage? What will be the percentage of that medicine taker in terms of
Uh,
SAM?
the SAM.
Yeah,
For the SAM, as I told you, this market of 5.6 is actually I will take 20% of it. So I'm seeking to take 20% of the 5.6 million.
perfect. Now we make it down a little bit. So SOM, sizable obtainable market. Now we even get closer to our target. How will you
Okay.
go for the SOM?
I will
What would you do that? How would you do that?
for the sum, I take 3% of conversion rate.
3% of the conversion rate. What was the logic behind? Why would you do that?
Uh, it's all time. I'm taking this from the statistic website of applications. I
Okay,
found that in the total searching users, they have at least 6 or 7% conversion rate. So I take it the half of this rate to be reasonable.
perfect. How did you come up with the pricing? Did you set already the pricing or you're still planning on the pricing?
Yeah, actually, I'm talking about 28 dirhams monthly rate.
28 dirhams. So if we calculate it dollar, it would be 28.
It's 7.62.
Seven
Yeah.
point yeah. 7.62 is your
Yeah.
price. Okay. So quick question. How did you come up with 7.62? This seems very precise, by the way. I appreciate you did that, but can you just tell the reason behind? So it will be helpful for everybody who is looking at it. We can
So
explain it.
at this stage, I take this price as the half of the average pricing in the market, which is which is 10 to 12 dollars a month for these kinds of applications.
Did you analyze from the existing application on Android and iOS?
Yes.
Wow, that's great. How did you do that?
I will send you the website giving those stuffs.
Yeah, shoot on. It
Yeah.
will be useful for everyone in the
Yeah.
chat box. That's great. Okay, so everything else is I'm considering as statics, like it's not relevant to you. You are a B2C platform and you are charging 7.62.
Hmm.
Okay, so now we're gonna go on to the pricing strategy. So
Okay.
you did your competitors analysis based on the healthcare applications, right,
Yes.
Nabil?
Mm-hmm.
Okay. So A/B testing. Did you perform A/B testing already, or you want to perform that?
No, I didn't yet.
Okay, so you know the A/B testing. I explained a bit about it. A/B testing is you create two groups. Do you have a
Okay.
landing page for your application?
Yes.
So you can use your existing landing page and understand from the user behavior. This question came from so many startups, like how we can be so assured, like we are charging the right price. Trust
Mm-hmm.
me, no one knows the right answer. Only the user knows the right answer. And how
Mm-hmm.
you can go with the user. So for user, you need to create a landing page. Even if you have a prototype or you don't have a prototype at all, and it is in a process,
Mm-hmm.
just create a landing page and create a beautiful UI UX, add your pricing. $5 group pay, $10 like premium and super pro. $5 for the premium, super pro, $10.
Mm-hmm.
And then reach out to the users, potential buyers, and see what are they clicking on, or do the survey with them. This is the very, very important step to understand the user behavior towards your pricing. It is the user at the end of the day who would tell you what they want to pay. Few things you need to keep in mind for the pricing. The SaaS is a very good in terms of low cost structure. What will be the cost that you will be incurring in the first year? Nabil, can you tell me on your product?
So, please, could you repeat?
What will be the cost that you will incur on your product development?
Uh,
Estimated.
Estimated first year, I'm talking about uh, 500 for the access to the APAs, and I don't have the monthly rates for a developer
We
in
assume,
QA.
Nabil, we assume you for the basic prototype or
Mhm.
for the MVP, you might go for the $20,000. Is that okay for the
It
product
would,
development?
we will go about $30,000, an
Okay,
average of 30.
$50,000. Fair enough. So now, when you are making a pricing for 1 year, you need to take into account the cost associated with the product development
Mm-hmm.
into the pricing over the span of 1 year or 2 years. Other than that, you should not worry about in the pricing. Only you should worry about the user behavior. I tell you the difference. If it is a capital intensive business, supposedly somebody is starting a grocery store, someone is investing in a capital intensive property development business, they should worry about their fixed cost, variable cost, because they are quickly based on return on investment. If they are incurring the losses, they cannot survive. Their day-to-day operational cost is super high. For the startups, the good point is you don't need to employ a huge workforce for your product.
Mm-hmm.
It can generate you passive income. Only two, three, four, five people might be able to run good businesses. And in the coming time, less people, more automation, and more work. This is gonna happen. So you can have 70-80% margin on your product. So keeping that in view, you can easily navigate through your pricing. You can charge more, you can settle the pricing without being worried about the cost structure that you are charging because you will earn profits ultimately out of that.
Mm-hmm.
So I guess you can do this immediately after this. Like you can create a landing page, post the pricing, and check the user behavior.
Okay.
So on the side, I will supply this sheet as well. Everybody should can go through this and can test out A/B testing. So A/B testing compare two price points with two customer groups to see which drive better sales, maximize revenue with data-driven insights. There are two groups, group A and B will have a different pricing points for both the groups. Now we come to the price points. These are the two price points. We will charge A5 and B10. These are the customers acquired at the price point decided above. We acquired in A100 and B80. So it will give you an insight. More people are coming to A or B. If they are coming to A, that's
Mhm.
favorable. If they are coming to B, that's favorable. Or you
Okay.
can even add another pricing. Retention rate. So this comes once you launch the platform, you have an MVP ready. Now you have launched the MVP. After
Mm-hmm.
the MVP, it gives even more better results. Like the person who is paying $5 stays longer, or the person who pays $10 stays longer. So you need to compare the retention rate. If they stay longer, month over month, then that's another factor to take into account. So you can compare the earnings from both groups, the total earnings, and make your decision based on that. So you need to keep in mind all times you need to perform A/B testing. It's not just one time thing. Startups, I do talk to Series A level startups B level, they still struggle with the pricing because they continuously tweak around, testing out different things. You cannot settle down with any pricing at any point in time. You need to look at different factors because the market is evolving. For startups, market is a continuous evolvement. You need to keep your eye open, keep testing the market. Then the
Mm-hmm.
other factor is the competitors' pricing. So this is very, very important to look at what your competitors are charging. So if in the startups, those who are here, someone says they don't have a competitors, please raise your hand and I will show you your competitors right now because there is no idea in there that someone is not working on. You, the many startups, those who have amazing ideas, they have similar startups raised funds in different regions, and which is not a bad thing. It's a good thing. And you can learn from them. You can use their pricing models. You can test out, even you can outreach them and you can ask them, hey guys, what are you charging? And what is your logic behind that? So the startups, the good thing about the startups is everybody is very cooperative and try to make good relationship with your competitors, the founders, those who are working on the similar model in different regions. So it will be a very good help for you as well. Now we will quickly go to the main template. I will provide you the updated one, and then we will look to the financial sheet, like how to calculate P&L, how to calculate expenses, and all that. Any question until this point, please shoot that. We'll look into that.
Not a question, but I have just before we go into the next step. So for the purpose of this workshop and this exercise, it's good to have the bigger picture and look at all the elements. The beauty of this competition is that the operational, like the startup will look at the operational expenses, which is building your MVP because they don't have an MVP yet. So whatever they will be doing here is a projection of how they are looking at for the future. So just wanted to clarify that for everyone who is in the
We are
chat.
just going on a bigger
That
picture.
yeah, even if you're not generating revenue, we're not expecting you to generate revenue at this stage, but to look at what are the projected revenue that you're expecting at generating based on the revenue model and pricing strategy that you are doing.
Perfect.
That's it.
We
Yeah.
are going to the big sheet. You will see the big numbers coming out.
Thank you,
we-
Sarah, for the clarification. And in the same time, Ayub, if you just came back in the ratios in this same page.
Okay. This one?
Yeah, this one. So actually, as I am in idea stage, and my pricing is based on what is on the market. Uh, how can I put this idea of grouping users before the MVP?
So you have a clear idea about your product, right?
Mm-hmm.
You have a UI UX, Nabil.
Yes.
Is that correct?
Yes.
UI UX meaning you have a Figma and complete design.
Yeah,
with
yeah,
you.
I know, I know.
Yeah. And then you have a prototype as well, some basics, right?
I started to prototype the
Okay.
application. Yeah.
Okay. So what you can do is create a landing page for your product
I have it
and assume
already.
that you have launched this product and you want to test out what will the buyer's interest be. It will give you two good things, two insights. First, it will tell you whether the buyer is interested in your product or not. They will tell you this. And second, it will tell you about the pricing. Or you can add a message box on your landing page if they are interested, but they have some other pains as well. Like they are interested in your product, but they do want to have some additional services. So this will be a good exercise for the market validation, for the pricing, plus for the product. So do this exercise as soon as possible. It will help you in the short run, mid run, and the long run. Do that from the beginning.
Okay, thank you.
Yes, please. Feeling.
Ahmed,
Hi
you
there.
can ask your question.
Can you hear me?
Yes.
Yes, can hear you.
Okay. Regarding pricing strategy, how important is to include freemium users in part of that for building traction? That's one. And number two, in the future, converting them into paid subscribers, for example. Is it a good idea to include the build up, the traction of freemium users on the application? Would you advise that something like that on a financial breakdown, would that be something of interest to an investor, or is something that is risky to present?
So the thing is, what investors are looking at, first we need to identify. Investors are looking for your market validation or product idea validation. It doesn't matter you have a prototype or not. What matter is you are on the right track and you know you have skin in the game. The term I use, skin in the game, meaning you are well aware about your industry that you are operating in and you know your user well. If you know your user well, you know what they will be paying you and you know their pain points. So this is very important for you to understand. When you understand these two things and you work around it, you will know whether they're gonna be, would they be interested for the premium or would they pay from the beginning. Best idea is to create a freemium model, ask them to subscribe, and after 7 days, give them a free trial and then convert them into a paid version because you are a new app for them. They didn't try out, they don't know much about you, just give them some kind of validation for you, give show them the reliability of your product and then they will convert into that. This is one of the best way. Coming to the pricing, which again I will say A/B testing, just perform that, understand the user behavior. This thing I will say, if you say me, the whole crux of the pricing and the target market size is understanding your user behavior. Guys, this is the one thing that you need to do super smart and super well. Pain point, understanding the pain point, understanding the user behavior. If you know this well, you know what they're gonna pay because you are continuously trying to reach out to them, not sitting on the desktop, just reaching out to customers all the time and asking them questions. This is one of the best way to understand what are they interested in to pay because every product is very different. I came across this 24 applications. Everyone is very different in product, in the outreach, in the target market. So depending upon your product, just tailor it accordingly. That reach out to buyers and they will tell you what they want to look at, what they are willing to pay for that. We will quickly go to the bigger picture, the profit and loss. We have less time, and then we will go to quickly to a hands-on exercise and question and answer. Thank you so much, Nabil. Thank you.
Thank you too. I'm here.
My pleasure.
Before you go to when you are opening the template, I just want to resend it to the group chat. This is the download link for the updated financial plan readiness template so that you can open it from your side. You can work on it together with Ayub. Yes, we're able to download it. Okay, thank you, Hamad. Okay. I will remove your thumbs up now. Thank you, Noor. Okay. Back to you, Ayub.
Sharing now. This is here. So everyone can see my screen now.
Yes.
Yes.
This is the template financial model, financial forecast. it contains, as I explained earlier, the financial planning process involves the financial model and forecast that includes P&L, cash flow statements, and important KPIs. It also includes the cap table meaning your equity structure. So how you can use this workbook? All the instructions are given here. Step one, the update the numbers marked in blue in the tab parameters. Parameter is your control center. You can change anything in the parameters and the whole workbook will be automated from the parameters. So don't worry about the formulas or anything else in the rest of the workbook. Just focus on the parameters. Even if you don't know well about the Excel, it doesn't matter. Focus on the blue side. Update the cells highlighted in the purple in the tab in the parameters, rename accordingly. Update the numbers marked in blue in the tab in cash flow. Update the text marked in blue in the tab cap table. So we will go one by one. There is some glossary, something like about the terminologies. You can familiarize, you can acquaint yourself with that. And the step 6 is like the standard pre-filled formulas. No need to put anything in the dashboard, P&L, and the tabs. And now we're gonna start with the parameters. Parameter is the control center. We will take one example. Who is willing to volunteer for this particular sheet? We will quickly populate it and then everybody will perform their own quick test. Who is gonna volunteer for this? Please raise your hand or I can select him. Okay, there you go. Hamad.
Yes. Where to share?
So first we're gonna start, Hamad. This is the parameter and the revenue. In the sheet, there are two sections. One section is the revenue and other section is the expenses. In the P&L, the only two segments are important. Revenue and expenses. That tells you the profitability. First, we will start with the revenue. What is your revenue? How are you gonna charge revenue? What is the price you have decided? We already discussed in the previous sheet how to calculate your target market size, how to set your pricing. Once we have set that, then you come to this and you put in here the numbers. And once you put in here the numbers, you will see the dashboard, which we were talking previously. This dashboard is for the strategic purposes. It gives investors a bigger look, like what are you earning year over years. Like in here, you see 25, 26, 27. These are 3 years. And you will get the numbers for 3 years. If you give this to investors, they will know like how a business looks like in 3 years. What is your recurring revenue? What is your customer acquisition cost? What is your profitability? What is your administrative marketing product development expenses over the span of 3 years? So it's a bigger picture any investor is interested to look at on the bigger picture. We're gonna start with the parameters, and Hamad will tell us about the subscription. How much are you charging?
I have 3 tiers. The first one is
Okay.
45 annually.
45 annually,
The second one is 80 annually.
80 annually. Third
And the
one,
third one is 1200 annually.
wow, what a jump. Why is that?
My revenue stream is modeled or is broken down into two: individual, so B2C, and service provider, so B2B.
Perfect. So how many customers do you want to acquire in each 3 tiers? So this is the section where you will have the pricing. And then we go down, we have in here, we have given the explanation. Choose the revenue stream, select the type of revenue that suits your business and rename it if needed. Then set the pricing, enter the price per user, transaction, purchase, impression, and commission. And then enter the expected volume. input the number of users, transaction, and services. So in here, we are adding the number of users. So what are the number of users or the app users you are expecting over the span of 1 year?
Before that, I have another question. Can we have
Sure.
multiple revenue streams? Because like in-app purchase is also something I'm considering.
If you have, yes, you can use that.
Yeah, I have that as $10.
Okay. So we can use this in here. In-app purchases. If you have in-app purchases like perks purchased in apps or in apps or games or as a revenue, then this section is useful to you. Otherwise, keep it 0. So what is the in-app purchases? When
It's $10.
$10, and you expect the same number of users. So you don't have any one-time service fee, right?
That's correct.
Right. So what is the total number of subscribers you think you will get in 1 year?
Based on my research with my TAM, SAM, and SOM, I'm
Yeah.
targeting 700.
700 in the first year.
Correct.
So this is the target market section. Previously, we entered the price. In here, we are entering the target market. So in terms of tiers, what do you think? How many will go for the tier 1, 2, 3? What is the percentage for the tier 1, percentage for the tier 2, percentage for the tier 3? What is your expectations in terms of that?
I put it down as 45% on tier 1, 25% on
40
tier 2, and 30% on tier 3.
30% on tier 3. So this is the sum 100. Right. And how do you think they will grow in the next year?
Uh, I'm sure tier 3 will grow faster than tier 1 and 2 because of the way the industry is designed. So I'm putting it down as 25% for the 2026, and then I'm putting down as 40% on 27.
40% in 27. So you think like your growth ratio will increase with 25 and 40 in the next years. Perfect. Okay, so now we come towards your in-app purchases. So what is the growth expectations for the in-apps purchases?
For for the number, I put down as 100.
Okay, 100% growth.
No,
Tier
sorry.
2.
On the column D, row 175.
Yeah.
Yes, there.
You will grow 100% in 2026. In this 75, see, this is the black ones you cannot change. These are the formulas. You can write down the growth rate for your in-apps purchases. Right.
The blue one on one cell right and one cell up. This one.
Yeah. So how many?
I put down as
100%?
100. Yeah. 100 100 units I can describe it. Yes.
Okay. Right. So perfect. So now you see the whole sheet is populated with the basics. Like we have previously gone with the pricing. We set here the pricing, then we came down. We have identified the number of users in here. We identified the percentage we can acquire in the year in different years according to the number of years. And here we have been setting down the growth rate 25, 40. So this is just based on your assumption, however you want to make an estimate. For this, the best way is to identify your competitors' growth or identify your CAGR, like how the industry is growing. If you believe the industrial growth rate is higher, that supports you, then you can adjust your growth rate according to them. It is generally expected in the first 2 years, you have to be realistic. Don't inflate your number. If you are inflating, it's from 700 to 875 seems to me bit low. Why? Because in the first year you're saying you're gonna acquire 700, and in the next year you're saying I will only go for 875, 25. Why? Why? You have to at least make 2x growth, or either you have to go 300 in the first year. So adjust that, make it more logical. Connect the dots from the previous year. If you're not able to connect the dots, investor or any stakeholder will question that. If you are able to acquire 700 customers in the first year, then in the second year, only 25% growth. What is the logic in that? So you will be in a defensive mode. You will be explaining and justifying the reasons. Rather, you should reduce the number in the first year or increase the number in the second year and connect the dots, make it logical for anybody to believe in your idea. Like you will exactly make the growth the way you are promising them. So this is what you need to take care of when you're
Understood.
working on that.
Understood.
So this you can see after we have after the parameters adjustment, we can see the revenue in here. This revenue is auto calculated, and according to the growth rate, it's being populated in the next years as well. This is the breakup of P&L. So it's based on the quarterly. You can see here it's auto populated for each quarter. So you can have a breakup if you want to look at like in each quarter, like the 4 months, what is the growth rate and how are you growing? So your in-app purchases in here, your revenue earned from subscription in here. So this is a pretty simple explanation, and same goes for the rest of the raw meters as well. So thank you, Hamad. I will take anybody else for the expenses.
Yes.
Is
There's
there
a question
anybody else?
there's a question from Sultan. Sultan, your turn.
Sure. Sure.
Hi, Ayub. It's lovely to meet you. I have a question regarding line C157.
Okay.
So it's the target market is below target market 157.
Sorry, 157. Okay.
So the percentage column, we would, I'm not sure about anyone else, but for example, for us, we would need a new percentage per year because the growth would be different per year across all 3 years, because eventually you would be benefiting from economies of scale. So, for example, the percentage of customers would be different in year one. For example, let's say 50% in year one, and then for a free tier, it would eventually go down across the other 2 years. So is it possible to get additional percentage per that?
You can, I didn't get you properly, but see, you can adjust the percentage of your subscription, and in here you can adjust the percentage according to, like you say, you're just going 5% the next year. You can adjust
No.
accordingly.
So it's the subscribers for tier one. If you go to subscribers for tier one, and then there's 45% there.
Yeah.
And it says 315 next to it for year one, and then 331 for year two, and then 463 for year three. My question is that our percentage across the 3 years would not remain as 45% for year one. So, for example, it would go down or up depending on the tier. So it might be
So
45 for year 1, and then for year 2 it would be 40, and then for year 3 it would be 35.
So I guess like you can adjust it and customize it according to the yearly growth. But for like if it's the variation is very different, like 45 to you're dipping to 10%, then it's a remarkable decline in that. So if it's not a big difference, then keep it static, 45%. Take the average of that because you don't want to create a lot of complexity in the financial model. But if you still want to make changes, modifications, we can do that. When once you prepare your financial model, we can tweak around. We can do that.
Okay, so you'd suggest to just take the average. Okay. And then I just have one
Make
more
it simple.
question.
Yeah, keep it
Uh,
simple at
for
this stage.
Yeah, for the partners, for example, if we have partners, you only mentioned total subscriptions acquired. So I would need like a total partnerships acquired section also to show how many partnerships we acquire across the 3 years.
We're running out of time, and I guess like we can talk once you are doing you're preparing your financial plan,
Sure.
and then we can go into that. I have noted down the points that you raised, and I will coming back to this once everybody is engaged in financial planning, and then they're
Sure.
submitting that. So we will
Okay, thank
go
you.
into that. Let me first go through this. I'm afraid we're running out of time. We're gonna explain everything, and then I've noted it down. We will figure that out.
Okay.
No worries. Okay, so anybody who is willing to volunteer for the expenses, we will quickly go through the expenses side and then the rest.
I volunteer Faisal. Faisal, are you there?
Hi,
Hi, Faisal.
Hello, Faisal. Greetings.
hi, how are you?
How are you?
I'm good. I haven't actually even done any of the template yet. It's just too confusing on the formulas.
No worries. We can talk about that. But I have a quick question for you. So to fill out the expenses side.
Mhm.
So keeping in view your product, what kind of expenses would you have in your business? What in the startup? Like, do you have a front end developer, back end developer, digital marketing specialist, UI, UX? So what kind of expenses are
Yeah,
you?
so I've got a developer that actually is equipped for front end and back end and app
Okay.
development in one. So I've got the costings, obviously what he's charging to develop that for myself, and then put him on a retainer to
How
be
much are
part.
you paying per month to them? Front end?
So at the moment, it's not been done. It's not done by month. It's just a one-off cost because they're still in early stage negotiations. Because at the moment, it's just about finding the costings.
Okay. So how you're paying per contract lump sum amount?
No,
Like how you
it'd be installments of 3. So one initial starting to get the project started, then mid,
okay.
and then on completion.
Okay. So is there any expense that you're incurring on a monthly base?
Yeah. So the monthly base cost once we're running will be fuel and employee cost.
Okay, what's that? Choose any option from the sheet and we will go further on that.
Okay, so just say for example, okay, so just to say hypothetically, for example, let's just do the CEO myself. Um,
How much
okay.
are you getting paid at the moment?
From the business, nothing, but I could put a hypothetical in there if you want.
Yeah, sure. How much?
Yeah. So I would just say just say a month. Just say 25,000 dirhams a month.
25,000 dirham. Okay. let's assume like 25.
Yeah, this is just assuming. Yeah, this is just assumptions.
Yeah.
Okay, let's say 20,000. Yeah, that's fine.
$20,000. Okay. So this is the amount that you are paying per month, and then this is associated with the chief. Are you the CEO, right?
Mm-hmm.
The chief executive officer, and then you need to come down in the
Mhm.
monthly expenses, and you need to select chief executive officers in here.
Okay.
This is so there are three sections when we are inserting any monthly salaries in here. The first is we need to choose the option like the chief executive officer
Mm-hmm.
is the only one headcount.
Mm-hmm.
No two people can be the chief executive officers.
No.
Then we need to come to the monthly salary. We need to select the salary. And then we can go here and we can add like the chief executive officer's expenses, monthly expense incurred on that. So you can see like once we have filled this out, the breakup PNL is gonna be auto-populated in here with the chief technology officer's earnings
Okay.
on a quarterly basis. And the PNL will be populated in here
Mm-hmm.
with the cost of sales. If it is a direct expense, if it's come under the operating expense, it will be in here. So
Mhm.
this is sort of like exercise, which super easy for you to
And do you have,
decide.
and just correct me if I'm wrong, you don't have to pay yourself, right, in the business to start off with, because
You can pay yourself. You can pay yourself. That's not a problem. But that should not be at the cost of the or at the cost of the product or liquidity in the business.
okay.
So if you are paying yourself too high and your product is still under development, that doesn't make any sense for
Mhm.
the investor, and they will never approve of that.
Mhm.
Be careful. What you pay yourself should not contradict what you are building. So if you got $100,000 and you are paying $20,000 to yourself, that's not a good thing for investor. They will never be happy for that. So keep in view even $1 million if you are earning, and you are paying yourself $20,000 per month, investor would never be happy for that, because then you're not serious about the business in the
Yeah.
beginning. This is the kind of impression they are making about you. So be careful about that.
Okay.
Okay, so this is the review of that. I want you to now fill in this pro forma, and then we will go quickly over the question and answer in the 5 minutes. And after that, you guys will fill in, and I will review each one of your financial plan. So guys, you already have the sheets. Just fill this out, and we will entertain the rest. There's a cap table, cash flow, simple. Everything is super simple. Just go over, play around, and insert the numbers, and then I will talk to you later on. Your time starts now.
May I ask a question?
Hi, Mara. Yes.
All
Mara,
right.
yeah.
Am I able to share my screen, or is that not possible?
Ayub, is it okay if Mara shares her screen?
Oh, yeah,
Okay.
you can share. But everybody, please continue working on your sheets and don't stop.
Mara, your audio is a little choppy. Yeah.
One
Yeah, your
Thank you.
audio is cutting, Mara.
Okay, give me 1 minute exactly.
I didn't understand. Okay, while waiting for Mara, thank you, Nabil, for sharing the website where you can get insights about actual apps.
Thanks,
I just
Abdullah, for
want
telling you.
to. Am I audible now?
Yes.
Yes, we can hear you.
I just consider the development cost as of now.
Can you repeat the question?
What red flag? Okay, so I wanted to review the delivery
Mara, your
costs
audio
of
is it's not clear.
Okay, what about now? Is it better now?
Yes, better. Ayub, you're hearing her clearly?
Yes, I can hear. I can hear
Thank you,
now.
Mara.
Please.
Okay. So I wanted to elaborate on the development costs and monthly salaries of the team themselves. Again, not all will be deployed at the same time. However, I wanted to discuss the feasibility of this plan. As you can tell, the prices are a bit high, and this is excluding the API or the security testing and all the other aspects of development. What advice would you give me, and what components of the team I can, let's just say, mitigate for later years, and what should I emphasize on as of now?
Okay, so if I understood properly, there was some kind of a disruption in between. You're asking me what kind of salaries or infrastructure costs you can capitalize in the first year, what can be capitalized in the second year and third year. Is that correct?
Exactly.
Okay, so
However, the
yeah. So what you can do is identify what are the key elements. For example, if you're developing a product and MVP, are you at MVP stage or are you at a prototype stage?
about to enter the MVP
Okay,
stage.
okay,
However, I would
okay. So you
as
need
of
to identify the basic cost associated with building the MVP part and just capitalize the immediate cost in the first year that you need to launch until the beta version of that. So MVP meaning immediately you will be launching the beta version of that. So understand the product cost and any associated cost with the product development. That's it. This is gonna be your first year thing. Do not include heavy in marketing cost, heavy sales cost. Do not exaggerate any number. Just focus on the basics in the first year. In the second year, when the product is completed, or how long would you take? Let's assume you say, I will take 7, 8 months to complete the product. So then you're going to start the marketing. So marketing technically will start in the month 9 or 10 or 11 once you have completed the product. So I would suggest phase it, like what the cost that you are incurring in the first year should be acknowledged in that, then as you are going on. So divide it rather than just playing it all at once.
And do you believe, as of now, I have developed the MVP, however, there's a lot of iterations that need to be done because I got feedback and needs to be optimized. Again, who are the core aspects of the team should I emphasize on? Like, it's obvious that I will not be needing my blockchain developer as of now. However, a data scientist is crucial in the early developments and AI is integrated. Who would you advise that I kick out of the team, let's be frank, and who should I emphasize on? What
Mahana,
skills are needed?
yeah, the team is the key. Investors, the two things are important. The first thing is your team. The second thing is your product and idea. The team is the key. Without team, the investor or the team's performance or the team's competitiveness, without that, the scalability is difficult. That's why investors are primarily focusing on that. So I believe you have to include the CTO, which is the key component, and include the salaries of the CTO in that or the cost associated with that. So developer is the key initially and view yourself as the founder and CEO. The two are the important pillars. Rest you can decide accordingly.
Okay. Thank you again for.
So the CTO, the developer, except not the blockchain.
Mm.
And who else, Mara, are your in your team? So anyone who is developing the app, correct, Ayub? So anyone that is involved in developing the app.
Okay.
Yeah, mainly the leader of
Mm,
that you're gonna have, the CTO, Chief Technology Officer. He would
Mhm.
who would be taking the responsibility of the product. So if you as a founder is not a CTO, then you need to have a good CTO with you. So investors are looking at the CTO plus the CEO. If the CTO is like the fractional CTO, fraction meaning you have outsourced to someone, that is not a very good thing. So better is to have your CTO or have a friend of yours or somebody who is a good at the tag be with you, and he's a good fit with your uh, team.
Background.
So investors are looking into that. So you can never ignore. And of course, the product cost is the essential cost you need to include.
Understood.
Ayub,
you.
there's no need for project manager just right now, right? Because the CTO should be handling that as well as the CEO.
Sure, that's but at the pre-seed, understand one thing: investors are looking into they are trusting you as a team. So if you as a team are just the founder without the technical skills, how can they trust you for the product scalability if some question, if
I
some difficulties come in, how can you handle that? So this answer this question all the time. A month.
So maybe, Mara, there's no need for the project manager. When I saw your screen share, so the project manager may not be necessary. So just the developers and the CTO. Thank you, Ayub. Sorry, Hamad, go
Thanks.
ahead.
Just a very quick question. The CTO and the CEO, they have to be two separate person. They cannot be combined as one person.
They can be combined as one person, that's not a problem. But who will be the salesperson then? Who will be the ambitious leader? Because the CTO would be working mostly with the product. Then who will sell the product?
Okay, understood.
Yeah. Yes.
Hey.
Java Games. Sheriff.
Hello, Ayub. Thank you for your guidance and information. It's very useful. And thank you all for your support. I have a couple of questions right now. It's regarding the first thing. The first year as a CEO, I don't want in my strategy to take a salary because I believe is my time is kind of investment in my business. Because for I will talk about my case itself because I work for one of the top companies in the world. So I believe in the pre-seed or the MVP levels, the company cannot afford my efforts or cannot afford my salary. So, which is mean I need to invest my salary into the company. It is really good to the company, but from the investor sides, it's not a healthy way because we are not building a family business. We are building an organization, which is mean we need to be financially stable. So, what is the situation in that? Is it good way to not taking any salary in the first year? That's the first thing. That's the first question. Do you want to ask all the questions or we can answer one by one?
Yeah, sure. So the question is your question is like if you do not take salary in the first year, will it be good or bad? So this is the question. So I think like the answer is abstract. Like it's not. It doesn't matter at all. Like you take or not. All that matter is how you are managing your cash burn in the first year. So if your cash burn is high, this is what investor is looking at. Cash burn is you're saying like I'm raising $100,000 and my monthly cash burn is $25,000, meaning you will be cash out soon. So even if you're not taking the salary, would not matter. So I'm just looking from the lens of investor or from the lens of cash flow management. When you are saying like I'm not taking salary or I'm taking salary, it doesn't matter. You take or you don't take. How are you managing your cash over the span of 1 year? This is the question you need to answer.
Okay. Okay. My second question is about regional discounts. For example, we want to expand in other regions. So at some time we we just set fixed price into USD dollars. It's not sensible to another regions. For example, we are talking about YouTube Premium for $14 in US, but it's just $3 in Egypt. So how we can handle regional discounts into our financial plan and as well as our operations and marketing strategies.
Can you say that again? I have some trouble hearing, or you can just type in here as well. I can read it properly and understand.
Okay, can you hear better? Can you hear me better now?
Yeah, I can hear you. Yeah, I can hear you.
Yeah, I'm asking about regional discounts for example for subscription models. For example, if we took YouTube Premium as an example, we can sell YouTube Premium in USA for $14 per month, but the same YouTube Premium in Egypt will cost like $3 only. That's all the subscription, because you know, as the economic level, the subscription fees, etc. of like the purchase power for users, etc. of many factors. So how can we handle the factor of regional discounts, or we can handle the economical levels abroad regions?
The last sentence, can you say that again? I'm sorry, I have trouble hearing you.
So
Okay,
Maybe-
maybe I can help. Can you hear me
Yeah.
clearly?
Yeah, I can hear you.
Yeah. So Sharif, your voice is cutting, but how I understood it, you're asking about regional discounts because it varies. The subscription cost varies. Like for example, YouTube in the US is higher or more expensive than YouTube in Egypt. So he's asking
Right.
about the pricing, the different pricing per, based on the region. What is your exact question there, Sharif? His Ayub's thought about that?
Yeah, that's right. For example, if I say the subscription for the application in UAE will cost like $3 per month. That's price is affordable according to economy level to that country.
Yeah.
But if you are talking about another countries like Kenya or Nigeria, $3 is very high subscription fees for the application. So how we can handle the difference in Egypt?
Yeah, this
In-
is
into-
I got you. Sorry.
Yeah.
I
Can I
got you.
jump
I
into
got your
that?
question.
Yeah.
And this is the question that mostly coming from
Sorry,
where is the
Ayub.
software?
Ayub, I'm sorry. Well, okay, yes, Sarah. I know that it's time.
But the regional, and you can add to it. Maybe you will look at where you're gonna launch the app first. Is that
Mhm.
correct? So you have a price point that match with the region where you're launching first your app, so you can acquire your first users.
Actually, we are talking MENA regions. So MENA regions includes
Yeah.
Still
this
different.
criteria of it's
Yeah.
still different.
Okay, I'll leave Ayub to add to it.
Okay.
Thanks so much.
Thank you, Sarah.
This is a very good question, and I think this is a contemporary question. I was talking to a founder. There's a very lovable app, the expense.com. They're providing 7 different AI platforms at one platform, and the guy he's based in New Zealand, and he launched application globally. And I was talking to them the same question that was being repeated by them, like they're facing difficulty finding out the right balance for the South Asia, like how they can launch there, because the $5 is even more higher for people to pay, and it's against the purchasing power of the people. So I think you can segregate the pricing, you can segmentize pricing based on the region. Otherwise, you will not be able to scale the product in the region. For example, if somebody, I'm using Fork. I guess a lot of you guys would be using Fork. Fork is the CRM that integrates with LinkedIn. So Fork charge for the annual pricing is I guess 500 something, which is if I divide, let's say it would go around 58 or something like that. So I think that kind of price is not affordable for South Asia. Like in India, it cannot be. People would not be willing to buy that. In Pakistan, people would not be. In Bangladesh, but the market is huge. Like it's a huge market. Even if we go to some of the MENA countries like Egypt, you mentioned yourself, the people will not be willing to buy that. So you need to segmentize pricing. Have you heard of Submerge, which is a SEO tool? Have you heard of Submerge SEO tool?
Mm.
They are charging according to the region. Like if you are from the region of India, they will charge you different. If you are buying from the UAE, they will charge you different. And the US is different. So you can segmentize pricing to scale it according to the region. Otherwise, you will not be able to scale it in the region, in the particular. So segmentize it, and that same answer that I said again at the beginning for the pricing. Understand the user behavior. If you're not able to understand the user behavior, there will be a problem with the pricing. Do that.
Okay, thank you. I don't know if I have run out of time, but I have another question. Can I ask it?
Yeah,
Sarah?
sure. Go ahead.
Yeah.
Go ahead.
Okay.
Sorry,
Regarding
Sharif, before you
yeah.
ask your question, because it's already 3:03, let me just
Okay.
double check with our committee members. Sarah, can we
Yeah, that's
continue?
perfect. We'll have time.
Okay, thank you. Sharif, go ahead, please.
Okay. Regarding the calculations in the financial plans, impressions of the advertisement, the calculations, how is calculated in the financial plan? Because I believe the impressions is calculated to be 1,000 per users or per the CPM. It will be for 1,000. So how can I calculate it in the financial plan? Should I write it like $2 per 1,000 or just O0 or O2 in the financial plan?
I would say please write down the question. It will be a lot easier for me to pick you up. I'm sorry, buddy.
Okay, sure.
Can you write it down? So the Nabil's question, I mean, question about pricing, as I'm planning to allow the app access for free to a first member of the users. Is that a question or you're?
Hey, Ayub. Yeah, it's a question. So I'm writing down the end of the question. So the question is, as I'm planning to grant access to the first users to the app, do I include this part in the marketing budget, or there is a special account for this?
You can include your digital marketing cost if you incurring any cost acquiring your customer, or like you're putting any ads or anything, you can include. But if you are just giving a freemium model,
It's not a free
you
model.
cannot capitalize any cost except acquiring the customer acquisition cost that we do call. Like, did you run any Google ads, any Facebook, Instagram ads, and any spending on that would be in the expense sheet. Rest, don't worry about anything. Don't need to include.
So if we tell that as let me explain another way. I am not on a freemium model. I am in a subscription paid model, but I will give just like vouchers for users for first 1,000 users to use the application for 6 months for free. It's just like a discount. The application itself it's paid, but I will give them a voucher to just to grant the introduce their data and increase my retention rate.
So are you incurring any cost on that voucher?
So technically, the only cost I have I'm supporting here it's the price of the application.
So you will not include, this is the marketing tactic. Like you are giving it promotional discounts, or hey, just subscribe to this, I will give you $50 voucher or $100. That has nothing to do with the capitalization of that cost. It's just a marketing tactic you're using.
Okay.
That's it.
So I will include it in the marketing budget.
if it affects your cost, yes. But if it is not associated with your cost, no, you will not.
Okay. Thank you.
Pleasure. So the question is the ads impression in financial plan, how it is calculated. Is it the CPM? So for example, $2 per 100 impression, should we write $2 or 0.002? You should just write $2 in there. So I will also tag in here our finance associate Abdullah to reply as well to this question.
Okay, so we are no overtime as for session. Okay.
Sorry, I sent the direct message. It has to be.
Okay. Anything? Hey, okay. Thank you, Abdullah. Abdullah is from Ayub's team also. Hi, Sarah. So I think we've run out of time.
Yes, we are coming to an end of this session. Up next is to for you participant to fill up the financial template that has been shared with you, and for the team to go through it and provide you a feedback. It will be an interactive feedback. So you'll have a detailed feedback on the template that you will have shared. So please make sure that it's very well done so we can provide you as precise as possible feedback. Joy,
Thank you.
yeah.
Yes, thank you, Sarah. So these are the next steps. First of all, thank you so much, Ayub. I wish we had more time. I think they have like a lot of questions and also very interesting questions because these are, very your answers are very actionable and to really help them as they continue working on their financial template. So thank you, Ayub. So, as for the next steps after this session, please continue working on your financial plan readiness template. As I've said, please make sure to use the updated one where we added more parameters that are applicable for your app business. Just a reminder to submit your financial plan version 1 on March 19th. So, this will be on Wednesday. So that we can review it. You have the details of how to upload, how to submit it on the email that was sent to you. After we receive your version 1 of the financial plan, we will do an internal review and then we'll share you our feedback by email. And then once you receive the feedback, please continue working on your financial plan so that you can have your final version ready, and ensure that the new numbers that you have and the other financial details you have developed through this workshop and through your own exercise are added to the final speech deck. Okay, so is there any other question before we let you go, or any other?
I had one inquiry. I shared it
Just
with you,
add
but I
one
wanted
thing,
to speak
like
to Sarah
for the
herself.
financial template.
Yes.
So I will say just work on the template and work it out. And after that, we will provide you the feedback. Don't worry about if you don't understand anything. Just work it out. And if you have any comment, just write down in your template, like this is the question, and then I will give you the answer when I'll be sending you back the feedback on that. So no worries about that.
Mario, you have a question?
So I just wanted to speak to Miss Sarah. Where can I access the recording? As I was in another meeting in the beginning of the workshop itself.
Okay, great. So we'll email you the link for the recording of this session to
I
everyone.
truly appreciate it. Thank you.
Sent as soon as possible.
Okay, So thank you, everyone. If you have any other questions, just reach out to us. The whole team, Sarah, Khadija, Carmen, myself, Ayman, we're all here to continue supporting you on this, and just send your messages on the WhatsApp group. What else?
And thank you for making it during Ramadan. It was, I know some of you are fasting, so good luck to everyone with submitting your template. And I am sure some of you have seen the Dubai Chamber of Digital Economy post a teaser on the 12 semi-finalists. It's like very exciting. I'm as excited as you. So I'm following their page and I'm waiting for the list to share it with you as soon as I receive it. If you haven't checked, just check. It's a really cool reel where we see some of you and it was shot during the semi-final.
Yeah, we have some very good looking talents in that video. Thank you, Manal. Okay, so thank you again, Ayub, for this very productive session. Sarah, thank you for always supporting our participants. And I will now end this. Otherwise, I will keep on just saying thank you. All right. Okay.
Bye-bye.
Thank you, Egemen.
Bye-bye.
Bye, everyone. Thank you.
Bye.
Benjamin. Someone's driving. Thank you, Asma. Shamsa, thanks. Diana, Shaima. Sharif, thank you. Diana, bye. Thank you. Thank you, Youssef. Thanks for your help.
Anytime, Joy.
Okay. All right, bye.
Bye.
Happy learning!